Hey traders, welcome to another video. Wanted to start this one off looking quickly at a news story that we talked about within our most recent podcast, the Performante podcast. We did discuss other topics related to countries discussing potential incorporation and adoption of Bitcoin and cryptocurrencies, but this one kind of stood out to me in particular. Russia's foreign minister did say crypto will be inevitably playing a role in international trade, which is pretty unbelievable. And we'll take a few snippets within the little blurb here. The Russian Foreign Minister Sergei Lavrov have underlined Moscow's intention to do away with the USD, the US dollar, and has suggested that crypto could play a part in ousting the greenback, which is the dollar, in trade deals, in international trade deals they're talking about here. And one more thing about de-dollarization, which is an interesting topic where currently the Federal Reserve really does have control over the global kind of economic power right now, the United States dollar, because it is the world reserve currency. If other countries have US debt, they have to pay it off somehow. But if the US has debt with other countries, they could just print it out of thin air and then give it to them. It's really that simple. It's pretty unbelievable the amount of power you have if you're the country that has a currency, which is a world reserve currency. So if you wanted to learn more about that, definitely discuss or definitely listen to Nathan and my discussion in our most recent podcast. So moving on to the charts here, we're first going to take a quick look at the DXY, the US dollar currency index. This is basically how the US dollar is relation to other currencies that are floating, like the euro. I think it's over 60% of this construction of this chart is the United States against 60% euro. There's also the yen, there's GBP, there's AUD/CAD, and a bunch of different other major currencies in there in that pool. But overall, this is going to be a relation of how strong the US dollar is compared to the rest of the currencies that are being used as major currencies around the world. So right now we have been seeing a little bit of a hold of the 89 zone. We kind of view this chart as a strength or weakness of the US dollar. If the US dollar is absolutely plummeting, the only real currency that is a risk-off currency would be, like a true risk-off currency, would be the Japanese yen. Very similar in terms of how they are trading compared to things like CAD, AUD, GBP. Those would be risk-on currencies, a little bit more speculative, especially AUD, New Zealand CAD. Those are pretty speculative currencies compared to the US dollar and Japanese yen. But overall, we have been seeing quite a bit of risk off behavior. A lot of people have been investing in the markets and have been profiting. We see crypto do well. Recently, we'll talk about that big dip and what's happening right now, potential reversal. But stock markets have been doing well. We will look at the SPX 500 after this chart, which is the S&P 500. But the United States dollar has been holding the 89 range well. One thing to note, I think if we do break below this 89 zone, we will have a plummet down, and this could initiate the next strong push for the cryptocurrency market. Since COVID of around March 2020, we've been seeing the US dollar absolutely plummet to the downside, losing a lot of strength, and we see things like the NASDAQ, the S&P, crypto overall absolutely exploding. So there is a negative correlation between the United States dollar weakness and risk on assets like crypto and safe haven assets, even looking at like gold, which broke out in the kind of later mid-summer of 2019. But overall, we do see a correlation between the United States dollar moving to the downside and crypto stocks, because it definitely is a pretty negatively correlated situation that we have right here. It does make sense. So when we're looking at the 89 range, we do see major level of support, previous level of resistance, and we see this is forming our huge double top formation. If we do break this 89 range, I think we will have a very significant push to the downside. It will be completing this double top formation. We do have to be careful. We did have some trading action below this 89 range, but we inevitably held on the weekly chart and did push back up. And if we're looking at a large time frame, this is a huge double bottom within an even bigger double top. So we do have to be careful that we are not going to be anticipating it too quickly. But I think a lot of the assets we're looking at will take its next leg either higher or lower at the same time, because they're all either positively or negatively correlated. It's one big market that you're really trading when you're talking about global macro. So when we break into a smaller time frame for the DXY, major level of support is around 89. The halfway point for the double bottom is around 91. This is also where our last kind of major level of resistance is before we started the long drawn out consolidation. We're currently forming a series of higher highs and higher lows very slightly, so I do think we'll have another dive and a push to around that 89 zone, and it's just a big question of if we're going to be bottoming right here and forming a larger double bottom formation. That wouldn't be a good thing. What we'd like to see happen, ideally, is we'd like to see something similar to this, where we're getting a slight squeezing pattern, maybe an ascending zone. You're able to get a contraction in the volatility, and this is what is going to get you the momentum and the initial drive to actually break this major level of support. So what we're looking to ideally have, if this was a perfect world, let's get our brush, is we get slight contraction, and then this contractionary period will give you the overall kind of kick you need to get below this major level of support. And once you're able to get there, you're seeing a nice continuational pattern, nice reversal, and then that next leg higher, ideally in a perfect world. So we'll see how it goes. As of right now, we are still contracting to the upside, so I am still expecting Bitcoin to consolidate a little bit more. Although on a smaller time frame, it does look like we have had some level of reversal. We'll take a look at it in a smaller time frame here. So that's going to be my view on the the DXY, which is the US dollar currency index. The S&P 500 is at its all-time high. It just broke it. As of right now, we do see that we are pulling back slightly, but we did hit an all-time high at 42.51. If we're looking at a 2-day chart, we can completely take this out. Not really important. We have been really just on the kind of higher part of our expanding wedge. We are currently at a level of resistance from the previous high, as well as decreasing overall volume and contracting in volatility. So I do think a pretty big move is going to come somewhat soon. We have seen a lot of potentially bearish formations actually turn out to be a positive. Like this larger expansion actually broke to the upside. It was pretty worrying when we were within this zone, because we were kind of grinding up. If we started to trade and then contract and then break to the downside, that would be a potential point where it could be looking pretty bad. But we actually broke to the upside. Lots of buyers, I'm sure, were a little bit surprised, or a lot of shorts definitely were a little bit surprised. We have been slowly grinding up to the upside, and we're at a point where we're at a previous level of resistance. We're decreasing in overall volume, so there is a contraction in volume and overall price action. So there is a point in time where the contraction has to end, and we're just going to be looking to see which way it's going to be moving to. As of right now, with where the US dollar is, and with Bitcoin, and where with the SPX is, I think we could take a little bit of a tumble. There could be a slight hesitation for the S&P, where Bitcoin could be moving up and then taking another tumble, which would really work well with the overall observation that we're seeing with Bitcoin. But kind of sticking back to the S&P, when we're looking at a smaller time frame, we see well-respected series of higher lows and higher highs slowly grinding up, kind of forming an ascending wedge formation. And then let's just quickly take a draw to understand the formations that we could see out of it. So firstly, normal view that we do see within an ascending wedge in an uptrend. Let's say this is an ascending wedge right here. You see the first option, which would be a melt up. That would be a first option. You have points where they have reversals, obviously, but you're not really going to get that too often. And then the other option is you have an ascending wedge, and then you actually break to the downside, where you're going to get that break in major level of confluence, where you get that ascending zone and key level of resistance, previous level of support, where you got a lot of buyers. And once that confidence is broken, it usually takes a very aggressive move to the downside. As of right now, in my opinion, it does look like it might be taking a little bit of a tumble to the downside, maybe towards our previous major level of support at around 4,100. When we're looking at like a larger time frame, we can see very significant zone. And on the weekly, lots of buy pressure. You see wicks to the downside, massive candles, or massive body, or massive wicks, and the just wicks to the downside, and very small bodies where you see not a lot of actual price change compared to the open and the close, but you see a big move to the downside where bears try to initiate the momentum to the downside, break below this key level of support, but buyers are able to hold above this major level of support and actually bring it as very close to that open. Ideally, we'd like to see the close higher than the open to create a nice hammer, but this is still a pretty bullish formation in my opinion in terms of where we see a level of support. So if we do see a slight drop from this ascending wedge formation where you're breaking, let's kind of change into a smaller time frame to see a zone of confluence. So right here, the zone of confluence that I would be looking at would be this zone right here, previous level of resistance, support, resistance, support. So if we do see any trading above this zone, that's great, but we have to keep in mind that if we see a break and then we start kind of hovering within this level of support and we break this level of support and trade below this zone, that would be a slightly worrying situation because we could take a slight dump to the downside, but I think that might set us up for a great potential continuation pattern to the upside like this, where we inevitably break this zone, and then we're also going to be creating a larger series of higher lows, something like that. So we'll see how it goes. In my opinion, there's still a little bit of time before we actually see our next major move, similar to what we saw in like October, November, December, in like early spring of 2021. That was a monster move that BTC and all of these alts had. A lot of people got I would say sucked into crypto thinking that that's how it's going to move all the time, where that's not necessarily the case. If you've been in pre-2016, 2017 bull run like Performante has, we have seen bear markets that extend years, so you just have to be patient, especially when you're in a bull market. You got to be expecting that next push to come. It's just a matter of when, in my opinion. So we're going to be looking at a different chart here, but that's going to be my overall breakdown of the S&P. It's pretty reactionary. I don't think just yet there's a clear indication of which way we're going. In the short time frame, I think BTC is actually going to be moving to the upside, but I think it would be healthy if we did get one last correction before the overall market does take a move up. Talking about SPX, the NASDAQ, Bitcoin, Ethereum, Cardano, Uni, Cake, all these different altcoins as well as Bitcoin. I think it's going to be a little bit of time before we actually get that next major leg higher, but I think it is still yet to come where we're going to get more than the next half in terms of appreciation for these different alts that you're all investing and trading in. So hopefully that gives you some broader kind of global macro perspective of where we are in my personal view. US dollar, I think, has some slight movement to the upside, but I think overall long-term trend is to the downside. SPX, I think we could have a slight move to the downside, but overall long-term trend is to the upside. Not a whole lot to discuss. This is the Dow Jones, and this is the volatility index, the VIX, which is the volatility of the S&P. Usually, we'd like to see significant pushes to the downside, similar to kind of what we're seeing here, or decreasing volatility when we're seeing moves to the upside, which we're currently seeing right now. So if we do see kind of a spike within the volatility index, so if we're going to get, like, let's say, let's just draw that in like so, and make that not a dotted line, and make that red. If we do start to see a contraction and then an expansion phase, like if we're seeing a slight contraction there, the volatility index is not something that I really trade often, but it's a good tool that I like to use to understand the broader market volatility. If we do start to see an expansion, we're getting a little bit more of a pump in the volatility. That obviously means that we're seeing, usually 99% of the time, moves to the downside within the S&P, so that's a good tool to use if you do start to see major levels of resistance and support, which would be like, let's say, the $19 range break on the VIX. So let's just keep it open to the S&P, close that down, and now we're going to talk about the crypto market. We're going to first start off with the Bitcoin dominance chart. This is the chart right here. I'm going to take a little bit of a sip of this beverage, and then we'll jump right in here. So when we're talking about the Bitcoin dominance chart, we're currently at 45%, meaning Bitcoin is currently 45% in terms of market cap compared to the rest of the cryptocurrency market combined, which is still a substantial amount. We consolidated above 90% since February of 2017. That's how significant Bitcoin was compared to any other altcoin. As of right now, we have dropped quite a bit. We were hovering around 60 let's say 55 to 72 for quite a long time. And the massive pushes to the downside where Bitcoin's losing dominance is periods where we're in major bull markets. So I think we just started and initiated our bull market right here. I think we do still have some room left to go. I think we're going to break our previous low of around 36% of Bitcoin dominance. And I think we're probably going to be reaching down into the 20s, around 25, 26, maybe even lower, depending on how much inflows go into the alts versus BTC. But I think for two reasons. The first one, the previous major push to the downside where Bitcoin was starting to really lose its dominance, like the start of the momentum to the downside, is over 60% to the downside. It was at plus 90%. It was at 94% and it dropped all the way to 37%. Our consolidation ended around April of 2021, where I guess you could look at it from the very top there, but depending on how you want to view it, from around November of 2020, that's when the true bull market started, because that's when BTC broke out of its major symmetrical triangle and it started to really rip up, breaking above the all-time high, getting into the all-time high and breaking it. That was the first major push when Bitcoin was taking back the dominance, because Bitcoin starts and initiates the bull run and then alts come after. Alt season is always after and delayed once it's confirmed by BTC and there's more speculators coming into the market. So after that point, if we're taking 60% from that zone, just looking at the previous bull run, we see around 27, 26%. Plus or minus, obviously it's not going to be exact. And if we're taking it from the last kind of cliff before it started its massive move to the downside, similar to what we had in March of 2017, like we started the bull run in later mid 2016 and it's really started to ramp up in 2017. But Bitcoin didn't start to lose its dominance aggressively until March of 2017. That's, quite a long time for the bull market to start, but Bitcoin is the main focus at the start of the bull market because that usually holds its value better than any other altcoin. Maybe not so much now because there's so many projects in the space, but before there was a lot less legitimacy. So I think there's definitely going to be more altcoins that are going to hold its value through bear markets, but I think they're going to be selective. So going into the consolidation before the drop of the cliff, if we take it from that, the kind of support there, that would be in the low 20s. So I think around mid 20s, around 27 to 23 would be a good area for us to look at as a potential level to end off for the Bitcoin dominance when you're looking at altcoins taking more of the market share for the overall cryptocurrency market, because there's so many different categories. Even looking at new categories that just arise out of thin air that are kind of not great for the overall market, but does create a lot more marketing. And I think it is not positive in the long term because it kind of makes cryptocurrencies look like a gambling casino to some degree with all these safer moon, Shiba Inus, ass tits. There's all these different meme coins, and that's not really providing a lot of legitimacy for the space. So there's some negative aspects associated to having meme coins be a main contributor for people to get into the space, because there is real projects that have a lot of potential, that have a lot of use case compared to people who just copy the latest ERC or Binance Smart Chain Network token and try to market the shit out of it in order to basically market better than the next guy, which is kind of what they're doing, which everyone has a role to play. But at the end of the day, I think the true projects are the ones to really hold value over time. So moving on to the BTC chart, let's just open that up. It's going to be right here. Just a quick discussion before we actually go into the BTC chart here. Notice how Bitcoin is able to hold its value better than most altcoins. Solana is actually doing pretty well in terms of holding its value, but if we look at like a smaller time frame here, from June 6th, it's currently June 13th, we see BTC is holding its value way better than every single other alt on the screen, which would be XRP, Matic, Binance Coin, Cardano, Ethereum, DOT, XLM, Cake, Solana, Uni, all these different altcoins. Bitcoin's doing much better, and that's on average because Bitcoin is going to hold its value in bearish times, fearful, and certain times better than most alts. So definitely keep that in mind if you're unaware. So we'll jump into into the Bitcoin chart, and then we're going to end off looking a little bit at the commitment of traders, the BTC COT, which is going to be giving us basically a tool that allows us to understand what the 4 largest buyers and sellers are doing. So the whales, what are they currently doing, which is some pretty insightful information. So let's go to the weekly chart and have a quick breakdown of what we've seen. Massive push to the downside because of our ascending wedge formation and because of Elon's tweets, which a lot of people are speculating, which can't deny that he has not affected the market. Let's just say that. But overall, we do see that this higher low from our low created in January, February of 2021, I think has been formed, and we're currently starting a reversal. I think there's a little bit of hesitation that we're going to be having around the 45 to 48K because it was such a major level of support for our head, for the head and shoulders. That was a possibility, but we did not actually form the kind of total formation where we need to break below that 30K zone. It could still obviously come into play where if 30K does break, that would form the head and shoulders, and that would be a pretty bearish situation. But as of right now, we formed the higher low. We can create a nice ascending zone and a descending zone connecting the lower highs and higher lows, creating a squeeze, a symmetrical triangle, and I think this is going to create our next big push. So then we can actually get to the plus 100K range, which I think we will hit in 2021. So let's just talk a little bit about what we're going to be looking for on a larger perspective. So this is our first major push to the upside. I think we have bottomed for the completion of wave 1. I think we're going to have a slight wave 2. We're going to have a push, slight consolidation, slight pullback. This is going to be like that last breath of air for the bears before the bulls start to really take it up above major levels of resistances. We're going to break out of this major level of volatility contraction, and then that's going to set us up to break the 100K range is my personal prediction. So that's going to be the overarching kind of viewpoint that we are currently having. We've had it since we've seen these big wicks to the downside back in May of 2021. We've been patiently waiting and just updating everyone to understand what's happening here. We were a little bit spooked by the symmetrical triangle, but we do break it down on the 4-hour chart. We can then look at the volume to make sure it is visible. And there we go. So when we're looking at the 4-hour chart, this major level of resistance was really challenging for the buyers to break above for quite a range. We were talking about this ascending zone that had a much more aggressive support, which we can see right here, compared to the resistance zone. We unfortunately broke below that zone, and after that point we had quite a significant dip. I think a lot of shorts, major level of support, major level of support, major level of support, key level of resistance. I think a ton of people were short here, where if you're a discretionary trader and your bias is bearish and you are expecting it to, let's say, go to 22K, or a lot of people think that it was going to go to 24K, you're possibly going to short here. Major level of sensitivity, and you just broke key levels of confluence. So I think the trend is your friend if you're looking at it from a short perspective, but we're in a bull market. I think it's not the time to be shorting right now. We got absolutely stuffed, so the shorts maybe got squeezed right here. The price ripped above this major level of resistance and then came hovering right below this major level of resistance right here. And again, we see what you call basically it is a very small version of what you currently see on a large time frame. It's called a fractal, but you see a major symmetrical triangle here pressing up against this resistance, and then you see a breakdown, but a very quick recovery. The fractal of this is the exact same resistance, and you're seeing the price push up with a much higher ascending trend line compared to the descending zone. You see a break where it could be an opportunity for a short. Let's take a quick zoom in here. Understanding where we are on a large time frame, let's zoom in a little bit closer on a small time frame and talk about this fractal that we're currently seeing. So That larger time frame is very similar to what we're seeing right here, where the ascending zone is much higher than the descending zone. You got a break to the downside, major level of support turning into key level of resistance, potential opportunity where you look, if you are looking for shorts, you could be looking for shorts. We've already seen this dip. This is the pullback, and then you're looking for that next move to the downside if you are a short. So I'm sure a lot of discretionary bears were looking at entering maybe like just below this zone, like within this range. Some people might be entering within this range, assuming that this is going to be holding as a key level of resistance. So once this massive candle, this huge green dildo right here, once that came in, basically all the shorts were done. And then we have our price set right next to where we had this zone. So if you're looking at this zone, it's a pullback, consolidation, and then a push upwards. Very similar situation what we had here, right? We have the point where bears could come in, they got squeezed out. This is the point where it's a key level of confluence, where you see that ascending zone and that descending zone create our major level of confluence. You see some trading occur, you see some hesitation, and then this time, instead of moving down, it moves up. So in my opinion, this was a battle. This was a whole battle from all the way from May, or early May of this year up until now, June of 2021. That was a battle between the buyers, which are holding the 30K range, and the sellers, which are holding the 40K range. And I just think right now the buyers have won. This is another confirmation that yes, we have completed multiple attempts of pushing up, and this is the validation that we have won. We tried here, we failed, we tried here, we won, and this entire time we were assuming that buyers were winning. If you're looking at volume profile, you can see that there's a lot of volume traded above this zone, not a ton here. So you're seeing a lot of buyers enter when the price is increasing, going higher. There, I think, is a lot of indications. If you're looking at the volume as well within the chart right here, let's zoom out a little bit and wait for this to load. You're seeing increasing volume, and you're seeing overall buy pressure surpass the sell pressure within the consolidation. So there is a lot of, in my opinion, checks that I have within a consolidation to see if it has potentially not even bottomed, but is looking a little bit more bullish than bearish. And I think from the technical analysis and the VSA, the volume spread analysis, and looking at the volume profile, there's a lot of indications, to me at least, that this bottom has formed. We could be looking at a nice push to the upside, slight consolidation, and then that rally to continue throughout the rest of the year, kind of deep into summer. So I don't think that we're going to hit all-time highs soon. I think there's still a lot of consolidation for us to go through. The weak hands will slowly sell because they don't have enough patience. And the second half of this bull run that is truly going to really affect your life is going to get lost. And a lot of people are not going to be able to actually take the full potential for this bull run because they just don't have the patience. So it's important to... there's a fine line between patience and stupidity. There's a person who said that's pretty close to me, but I think in this year, 2021, there's going to be another major push for the altcoins in BTC. We just have to have the patience for us to actually be able to profit from it. So that's going to be my overall view for the BTC chart, looking from a large time frame all the way to a small time frame. And then we're going to end off the video looking at the commitment of traders, the COT data for Bitcoin, BTC. A lot of acronyms, I know. So when we're looking at the commitment of traders, this is right here on the daily chart. Overall, what we're looking for is increasing buying from the green line, which is the buyers, and decreasing selling. So we saw all the way throughout the kind of bull run here, not seeing a ton of buy pressure, but before the bull run, look how much buy pressure came in for the sellers, and we saw a decrease in selling. So you can see, follow the smart money is a pretty common trait that you hear in the financial world, and definitely beats following the dumb money, which is probably going to be retail traders. So this is a good indication of what the whales are doing in the market. And although you do see slight selling that's occurring within this lower section right here, there has been overall buying that's increasing, especially in the dips. There's a little bit of hesitation where they weren't buying a whole lot within the consolidation, but you see a big spike in buying recently in June 8th, around there. So in my opinion, Not a whole lot of information from the sellers. Hasn't really changed a ton. But from the buyers, we see big dip buying coming in from the four largest institutions that are purchasing Bitcoin. So it does look like there is dip buying happening within the institutional level, as well as the retail level. Because if we're looking from the BTC chart that we see right here, this volume indicator is not just one exchange. It's not just Binance. It's actually an accumulation of all the major retail exchanges combined together, added all the volume together and divided by how many exchanges there are, giving you an average volume for all the exchanges that retail traders are using, which is an extremely useful tool, which you can find at Performante Trading on TradingView. So I think it's a really good way to end off the video. Thank you very much for tuning in. If you have any questions, drop them in the comments section below. We'd really appreciate a subscription if you do enjoy these videos and you want more of them. And if you got something educational, informative, or just entertaining form of, I guess, time for you watching this video, it'd be great if we could get a thumbs up for that, because we do truly appreciate it. So thank you very much for tuning in. Hopefully everyone has a good weekend, and until next time, have a good one, traders.